Hey everyone, AT&T reported second quarter earnings results. So in this video, I'm going to review those figures. I'm also going to update my recommendation of AT&T stock. Coming into these earnings, I had the stock on the borderline between a buy and a hold. I'm going to update that recommendation. You're going to want to know if I'm upgrading, downgrading, or keeping it the same. So let's get right into it. Starting with total revenue, which increased to 29.9 billion, up from 29.6 billion year over year. Overall, investors should not expect rapid revenue growth from AT&T longer term. Low to mid single digits is about the best you can expect from the wireless company. Adjusted earnings per share of 63 cents was down from 65 cents in the second quarter last year. Most impressively, the company added 464,000 net postpaid wireless subscribers. That was a huge result compared especially to Verizon, which only added less than 10,000 net postpaid subscribers. Churn of 0.79% was also better than its main rival Verizon, so excellent results from AT&T in that regard. The average revenue per user on phone increased by 1.5% to $55.63, showing that AT&T has little pricing power here. Remember, T-Mobile is pushing down prices industry-wide as it offers customers lower prices than what AT&T and Verizon is offering. Cash flow from operations increased to 9.9 billion. That was a huge increase from 7.7 billion year over year. Remember, AT&T has a massive debt load of nearly 140 billion dollars. Increasing this cash flow will play a huge role in being able to pay down that debt as interest rate costs have increased substantially. The amount of money that AT&T will have to pay for interest expenses will continue rising unless the company works to pay down some of that debt. Also, the company achieved its $6 billion of annualized cost cuts. It achieved that 6 months early, so it managed to bring out $6 billion of expenses, and that's great news. The company also announced that it's going to work to reduce another $2 billion of expenses as the company realizes, look, we're not a growth company. If we're going to look to increase earnings per share, we got to do it by becoming more efficient, reducing costs. That's really our main focus to increase earnings per share in the long run. So overall, a very good quarter from AT&T, especially if you compare with Verizon, which reported about a day ago. I do have a video on that out on my channel, so you can go check out Verizon's earnings results. But comparably, AT&T had a better quarter than Verizon, and it's doing a good job retaining customers as T-Mobile offers lower prices. The difficulty T-Mobile is having is in taking customers away from AT&T and Verizon. It's even though it's offering lower prices, T-Mobile is doing better attracting newer customers, but existing customers are not likely to switch to T-Mobile to save $5 or $10 per month because the hassle of switching phone companies for some consumers in the US is not worth the $5 or $10 per month. So for now, AT&T and Verizon are holding their own even though T-Mobile is putting pressure on the industry. So to update my recommendation of AT&T stock, I'm keeping it the same on the borderline between a hold and a buy. But that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.